Folks, this market has ruined thousands of plans. I'll get into that and then the latest home prices and insights for the city of Toronto for week ending January 15th, 2025. Man, this change in market has affected so many people, thousands of people. You know, the mentality used to be, I'm going back many years, I'm going back to when my parents bought the first home. The mentality then was spend money on nothing except paying your mortgage down. And then when we have either no mortgage or a really small mortgage, and we've got this equity built up in our home, then we're going to start to maybe go on vacations, maybe go out to dinner more often. I barely remember going out to dinner with my mom and dad. In fact, them taking the family out to dinner was only for really special occasions. And vacations was, it's nothing like it is today. I could remember the 2 or 3 or 4 vacations we went on, but not like today. But back then, the whole idea was to increase the equity in your home. You paid your mortgage down. That was the idea. And there was just a lot of push to put all your money, all your saving, whatever you could scrounge up from your work, put it into your home. And once the home was paid off, or again, the mortgage was really low, then you could start enjoying other things. Somehow along the way, as appreciation for home values were on their own starting to increase every year, the pressure on putting money into the home became less and less because values on their own were starting to increase very regularly, very steadily. Prices, for years were going up. On a bad year, 3%, but 4 to 6% a year, home values were increasing on their own without you doing anything. And that put less pressure on people to put money into their home. Well, at some point along the way, less money started being put into homes and appreciation started becoming more and more as a thing. In fact, there was a time where appreciation on home values was looked at almost like a third income. You got the husband working, the wife working, and the home working for you. Think about it. You had a $1 million home and prices went up 5%. That's a $50,000 increase. That was a third income for a lot of homes. And imagine you have a $1.5 million home and we had some crazy years where prices were going up 10%. That's a $150,000 increase in equity. And so people started putting less and less into their home. I know I'm generalizing here, but this is the experience I have working with people in real estate and buyers and sellers. And I'm privy to some of the things going on out there because of my experiences every day. And we started to see that. And so, kind of fast forward to today, a lot of people's plans, and for years now, not just today, but a lot of people's plans have been based on the equity built up in their home. And we're humans, right? So we tend to focus more on best case scenarios. And all that time during the peak. Now, we could take the peak down to right to 1 month, or we could take it to a whole period in time of a year or two. But there's lots of people during the peak time, we'll call it. Let's not label it as one specific day, but a period of time. There's lots of homeowners that looked at, well, if this is what's happening with home prices, if they're going up like this at this rate, I'm going to do this, I'm going to do this. A lot of them had no kids, young couple, but thinking, well, in 3 years, 4 years, 5 years, we're going to have 1, 2, or 3 kids. We will upsize then. Other people were thinking in 3 years, 4 years, 5 years, we're going to downsize. And we want to live this way and we want to live that way. From peak to today, and for a lot of people, those events are happening, last year, this year, next year. Their plans have really changed a lot. If you think about it, though, peak to today, it's not like home values were cut in half. But for many people, that 20, 25, sometimes 30% drop in some areas, that has been enough, significant enough, to totally change their plans. Examples that I've worked with last year, working on this year, there's people that, the young couple, they thought around this time, which was 3, 4, 5, 6 years after they bought their first home, to today, they were thinking around now is when they'd be upsizing to a larger home because they have the larger family. That was their plan. Well, those plans have changed. All of their plans were based on the equity in their home, which isn't where they thought it would be. And so now they're reconsidering. They have options. Do we stay put for a few more years for the equity to get to where we want it to get to? Do we still make the move, but instead of getting a house of this size, we get one this size? Do we still move, but not in the area that we wanted? Do we go into another area that's, I guess, better value, less expensive? Do we move out of town altogether? Do we move out of the province altogether? We've helped people make lateral moves because they just can't go to the bigger home, but for certain reasons, whether it's work or kids' school or convenience, they have to be closer to they got to be in a different neighborhood. We've helped people move out of the province where we sell their home here and they're buying somewhere else. They're buying the home they want, bigger, larger, but somewhere else in another province. There's all sorts of things. And then don't move. There's all sorts of things people can do, but it's not what their original plan was. And it's changed for many dramatically or drastically. We've helped people downsize over the last few years. And this year, we've got more on the cards that we're going to help to downsize. Now, their plan, for some that we've helped, their plan was to sell their big, large, detached home and downsize to a bungalow. They still have their health. They want to be in their backyard. They want their grandchildren to come over and play outside. So their plan was to move into a bungalow, but also have the disposable income left over to be able to travel and do other things. Those plans have changed because the equity in their home just isn't there. So maybe they are downsizing to a bungalow, but it's maybe not as large as they want. Maybe it's smaller. Maybe it's in a different neighborhood than they wanted. Maybe they can't go to the bungalow at all and they're going to go into a condo. Maybe we've seen that they actually can't afford to buy something else and maintain the lifestyle they wanted. So they're renting so they can continue to have money in the bank so they can travel. All sorts of things have changed. Some of these folks that we've helped that are downsizing, they're retiring, some of them to a nursing home. Their plans have changed so much because the mentality has always been the equity in my home is what they're basing their future plans on. And this turn in market has really affected thousands and thousands of people out there. Now, people could say, well, that's life. You should have money in the bank and this and that. Yeah, it's easy to say that and, hindsight, but a lot of people really depended on the equity in their home. And I think for many now, this downturn in market that we've experienced are really starting to kind of look at things a bit different. Home ownership is still priority, very important for most people out there. But how they look at home ownership, I think, is starting to change. And I think for the better. I mean, we want to protect ourselves and we want to build a stable future for ourselves. maybe home ownership is not, or only focused on the equity in your home is not the only way to do it. Look, over time, I believe home ownership is a very stable situation to be in, and home ownership values over time will increase. And I think most people prefer to own their home versus anything else. But I think of how we look at it as our only option to count on for our future plans is the equity. If that's the only thing we're looking at, I think many people are now rethinking that, especially if they're younger and they see their parents going through some of this, or if their friends have experienced some of this, they may be looking at only relying on the equity in your home as like a guarantee for future financial changes. I think they're rethinking that. If you think this video can help somebody you know, please pass it along. If you get value from what we're talking about, do me a favor, hit the subscribe button. If you want to speak with me about your real estate situation, selling, buying, it's really simple. Below this video in the description, there's a link to my calendar. Click on that, book a time that's convenient for you, and we'll talk about whatever's on your mind. Now, let's get into the numbers. Folks, this show is all about the freehold market for the city of Toronto. The next day, tomorrow on Wednesday, we're focused on condos for the GTA. Then the day after that, on Thursday, it's York Region, Vaughan, Richmond Hill, and Markham. And then Friday's show is about Peel and Durham. It's focused on that. Brampton, Mississauga, and Pickering, Ajax, and Whitby. But this show's about Toronto. Let's get into that. Here's a quick summary. Toronto, detached properties, semi-detached properties, towns. I do have condo average sold prices here. Just for reference, the difference between the average condo price and the average detached price for the city of Toronto, $736,000. That's one of the lower differences in price that we've seen throughout the year. But let's get started with detached properties. For week ending January 15th, 67 detached properties were sold. 9 of those were at $2 million or more. Sales are increasing, which is normal. It's what we expect at this time. January 15th is the second full week of the new year. We saw it last year. Sales were increasing, headed into February, then March, then April, and we're seeing it this year. It's normal that sales are starting to climb. Average sold price, kind of been, we've seen it quite a bit, a little bit over 1.4 million. For this week ending, we're at 1,429,000. 1,429 is 3% lower year over year. I should say, look, I'm sharing the numbers, I'm sharing average sold price, I'm sharing sales. We're going to talk about active listings and months of inventory and all that. It's still really new though in the year, and we're not kind of, full tilt yet. Take these numbers with a grain of salt. I know it's kind of a little bit crazy me even saying that because this is the whole show, the numbers. But, I don't want you to base everything on the numbers that we're telling you right now, just because it's still early in the season. The median price of $1,250,000 is 4% higher year over year. The dotted line, that's a 4-week moving average. And if we go back 3 months, average price and median price kind of seem to be trending down over the last 3 months. But November, December, typically prices tend to soften over this period. 67 were sold, 36% sold at list price or more. That's 24 homes sold at list price or more. Listings up from 1 week to the next. Active listings is starting to climb. And months of inventory did come down, so starting to stable off a bit, but we're at 4.2 months of inventory, which is pretty much a balanced market. but that's for the whole city of Toronto. If we break Toronto down into 9 different sections, well, we kind of start to see neighborhood by neighborhood, although these are big areas still. It's not really fine-tuning it, but it really does paint a certain picture. Scarborough, for example, we're at 2 months of inventory. The whole city is at 4.2 average months of inventory. Scarborough's at 2 months of inventory. 30 detached properties were sold. 40% sold at list price or more. Scarborough is one of our more active areas, one of our more competitive areas. But still, 30 sold, there's 257 available for sale. Let's go to the other side. Etobicoke, 3.3 months of inventory. A quarter of the properties sold. 12 sold, a quarter sold at list price or more. There's 169 active listings. So 12 sold out of 169 active listings. High Park, there's 48 active listings. 2 units, so 2 detached properties sold. York Mill, Rosedale, there's 268 properties available for sale. 5 sold. 5 out of 268. Think about that for a second. Semi-detached properties. 21 semi-detached sold for week ending January 15th. One of those was at $1.5 million or more. Average sold price up from the previous week to $1,114,000. 1114 is 9% lower than where we were this time a year ago. The median price of $1,070,000 is 1% lower. Months of inventory, a little lower. We're sitting at 2.6 months of inventory. Townhouses, these are freehold townhouses for week ending January 15th. 9 freehold townhouses sold. No townhouses sold at $1.5 million or more. Average sold price a little bit higher than the previous week, sitting at $1,077,000. $1,077,000 is 15% higher than the same week a year ago. The median price is 21% higher. Median price is $1,060,000. Months of inventory sitting at 2.9 months of inventory for freehold townhouses. Here's a summary of months of inventory. In most cases, we're not talking about the condo. Condos is pretty much a buyer's market, but in tomorrow's show, we're going to really look at the condo market in detail. But for the detached, semis, and towns, you're pretty much going to experience a balanced market. However, price point, location, all that is going to play into how aggressive that market actually is. Thanks for watching. Have an awesome day.